they are just waiting for the next bank runs, and then those big banks are going to be gobbling up a whole bunch of the small banks, and all of the cost of that, any losses are going to be passed on to you. Any profits are going to people like Jamie Dimon.
At goldsilver.com, we have a price match guarantee, free shipping, and global storage options. Learn more about how to invest in precious metals at goldsilver.com.
So, in the news right now, First Republic Bank is taken over by FDIC and sold to JP Morgan in third major bank failure of the year. And I hate to break it to, this is NBC News. Actually, it is the fifth bank failure of the year. We have had Silicon Valley, Silvergate, Signature, and there was Credit Suisse, one of the world's largest banks. This is international, this new financial crisis that we are in. But there is this fairly good article on Zero Hedge about JP Morgan taking over the First Republic Bank. And one of the things that always bothers me about these articles, though, is a lot of times on Zero Hedge, they will use acronyms and sort of insider terminology that you have to look up to understand what they're saying. So anyway, JP Morgan's CEO, Jamie Dimon, said that the system is very, very sound. The banking system is very, very sound. Well, if you take a look at the way the 2008 global financial crisis unfolded, there was a bank failure, and then there was 6 months, and then there was another one, and 5 months, and there was another one, and then 1 month, and then it started happening every week, and then there was a period where there were a couple of days in a row where there were major, major events happening. And so I think, my feeling is that this is just ramping up right now. So, he also said, first of all, JP Morgan, I didn't know it, but they hold over 10% of America's deposits. When they call it too big to fail, this is dangerous. And the problem is just getting worse, as I will show you in a moment. We need large, successful banks in the largest economies is what Jamie Dimon said. And he continued proclaiming that this is nothing like 08 or 09. No, it isn't. It's very, very different. And the problems are going to come from different places. In 08, I had been warning about what was going to happen since 2004. There's a video on it of me speaking at the Silver Summit. And I was showing the exposure to real estate. I was showing how overvalued it was, that this was a bubble that was going to pop. And it was for anybody that was really looking. And the Fed wasn't looking, even when Greenspan denied that it was happening, and it was actually his fault that it happened by taking rates down so low. When rates are low, real estate does really well. Now rates are high. You'll see the impact of that in a moment. Well, he's right in so much that this is far larger, and I believe that it is. And we really don't know where the CRE holes are yet. This is one thing I don't like about these articles that are written by one of the authors at Zero Hedge. He keeps on using acronyms and insider terminology where if you are somebody in the banking sector, you're going to understand this. I had to look this up. And this CRE is commercial real estate. So commercial real estate. So let's just take a look at a little thing here posted by Wall Street Silver. This is a San Francisco office tower. I looked this up, the tower on Google Maps, and it was for sale for $300 million. It's mostly empty, and they're expecting that it might sell for 80% less, which is $60 million. Now, a markdown like that on a project that is already financed means that the loan is worth less, the loans that exist. And so getting back to the article, Finally, the two biggest to fail bank CEO warned we are clearly going to see some reduction in bank lending, implying JP Morgan will be doing God's work for the Fed by contracting credit without the need for rate hikes. So if we take a look at what's already happening, home prices growth is the slowest in a decade, and San Francisco crashes. So we're about to go, and I show in my book that when real estate peaked, it was about 220% overvalued when inflation adjusted. So compared to the rest of the economy, real estate has to go down by more than half. What happens to all of these bank loans that are on the balance sheet when things go down like that? Now, just to really show you how you end up paying the bill for this, the agency estimated that its insurance fund, this is the FDIC, the Federal Deposit Insurance Corporation, estimated that its insurance fund would take a hit of $13 billion in the deal. And JP Morgan also said it would receive $50 billion in financing from the FDIC. Where does the FDIC get the currency for this? Well, every bank has to pay FDIC insurance. And so this raises the cost of banking, which means you are going to be paying more for all of your banking services. And so the FDIC and JP Morgan also entered into a loss share agreement on single family and residential and commercial loans it purchased from the former First Republic Bank. So that U.S. home price slowest growth, these losses are going to get worse, not better. This isn't just the slowest. It's going to be, everything will be crashing simply because of the bubbles that the Federal Reserve pushed it into. By holding interest rates down so low, banks created so much more credit with all of the loans. And now all of this is unraveling. Now, Jerome Powell was pranked by Russian callers pretending to be Zelensky. And on the call, he admitted that the U.S. recession is likely. And so when that goes into a recession, what is going to happen? Well, Dimon's closing comments were most prophetic, stating that they support community banks. So JP Morgan supports community banks, and that the banks will consolidate. Of course they will, once the banks are pushed into FDIC hands and assets scooped up by JP Morgan with government backstops. Translation: we will wait for the bank run, thanks to the Fed rate hikes, to cripple them all, then buy them up for for cents on the dollar, with the FDIC keeping the toxic crap. And that is exactly what is going to happen and what has happened with the savings and loan crisis of the 90s. There was a huge these are bank consolidations. I like the colors on this chart best, but this chart, you can actually read all of the different corporations. But you can see all of these different banks that have been consolidated into just 4 banks. Travelers Group and Citicorp are now Citigroup. Washington Mutual, JP Morgan, Chase Manhattan, Bear Stearns, and now you can add First Republic to this blue chart here, are now JP Morgan Chase. There's Bank of America. I started with Security Pacific Bank when I first opened a bank account, and it just merged into Bank of America. I still have my Bank of America account. But take a look at the number of banks, small banks, that these all gobble up, and we are about to go through another one of these huge consolidation phases. Then, if you take the percentage change in the number of U.S. banks, the smaller banks are down, and this is 2014, 15, 16. This is like as of 2017, I guess. There's 28% fewer small banks, but 33% more large banks. Going back through history here, the number since the Federal Reserve, this is like the Federal Reserve's job, is to help the biggest banks gobble up all of the small banks. The number of banks in the United States, and the Federal Reserve keeps on discontinuing. They don't want people to be able to follow this data historically. You have to download data, have somebody put it into a spreadsheet, correct it for any mismatch errors, and then try to make a long-term chart out of it. But it looks like there's information missing here. That's just a problem in the way that this tries to generate charts. But there used to be more than, there were 30,000, I'm rounding, 30,500, 30,400 banks in the United States back in 1921. This starts basically when the Federal Reserve starts. And then through the 20s, there was more and more consolidation of banks, and this is during the Roaring 20s. Then after the crash of 29, this gray area here is the Great Depression, 14,500 banks, 14,800 by 1941, so the beginning of World War II. Now, this is the total number of banks. The total number of non-member banks, so these are meaning not members of the Federal Reserve System. So before you went from 30,000, the total number, 30,000 to 14,800. But it was mostly the non-member banks that took the hit. Here you go from 20,000, which means it was 10,000 member banks, 20,000 non-member banks, down to 7,000. So it was really all of the non-member banks being gobbled up by the Federal Reserve System. Then we can continue this chart picking up in 1984. You can see there are 14,400 banks. Today there are 4,375. Actually, that is the third quarter of 2020. So there's been more consolidation since then. So the Federal Reserve System is this, I did a video about the Blob, and I think that was government growth. There was this old movie, Steve McQueen from the 50s, and the Blob was this thing that came from outer space, and it would just absorb any life form and then grow. And it kept on getting bigger and bigger, and it was just eating everything. Well, that's what the Federal Reserve System has created here. And so to refer back to the main article that we started with, the Zero Hedge article, they are just waiting for the next bank runs, and then those big banks are going to be gobbling up a whole bunch of the small banks, and all of the cost of that, any losses are going to be passed on to you. Any profits are going to people like Jamie Dimon. I want to thank you for watching. We'll see you next time.